Hello, everyone. Happy Friday. It's the end of August, and it is time for the Security Token Show, which means we've got the latest roundup of amazing industry news that happened this week. So much cool stuff to get into. We've even got Nico Pantelis back as a guest contributor. We've also got a ton of great interviews. Maple, REtokens, and now first, Anthony from Provenance and Alfred from NAV Lend on their big new announcement. Let's head straight into an interview.
Well, thank you all. Welcome back to another Security Token Show interview. Today we are joined both by Alfred from GateCap Ventures and NAV Lend, as well as Anthony Moro from ProvLabs. Gentlemen, how are you today?
Good. How are you, Jason?
Doing well. Appreciate you guys coming on. You guys have a very interesting announcement that came out recently. It's ProvLabs, Figure Markets, and NAV Lend all working together to bring issuance, trading, admin, and lending solutions for funds specifically, which I think is really cool for a multitude of reasons. But before we dive into the whole topic, let's give a general overview for our audience on what this is. If you guys want to give us a quick, a couple minutes on how this is working out for you guys.
Alfred? Yeah, so I'll go first. So good morning, Jason, thanks for having us on. So NAV Lend is a lending platform that is built purposefully to enable private funds to be used as collateral on chain. And we're really excited to create essentially a new on-chain use case to allow these assets to be used as collateral in a way that's not available now.
Just to add the power of blockchain and the power of what we've built at Provenance, specifically following or in the footsteps of actually Figure Technologies and what they've done with their lending product. Really, all the tools are in place to revolutionize fund issuance, private fund issuance on blockchain with a NAV lending option. Taking a big step back, I think a lot of practitioners would have thought that we would have seen more private funds on blockchain by now. It's obviously a multi-trillion-dollar market that is accessible. Several reasons have hindered that. We're not going to see secondary market trading on ATSs really anytime soon for most private funds because of the structure. Just by chopping up a private fund into $1,000 tranches doesn't make it significantly more attractive to investors. But something that does is really a superpower that NAV Lend and Provenance and Figure Markets have all come together with this project. The ability, if you're an LP and you hold a position in a 7 or 10 year private fund, the ability to take a 20 or 30% loan against your NAV position truly is revolutionary, and we think will unlock significant fund issuance because the world will quickly separate into those funds that offer their investors the ability to take out a NAV loan and those that don't.
Yeah, that's a value add, right, for the LPs to be able to get some additional liquidity. It's another form of liquidity, really, in terms of, being, again, to be able to add utility to your fund units. But then on the GP side, how does this benefit GPs, the fund admins and whatnot? How do they benefit from being able to give this option to their investors?
Yeah, I think that's a great question. I would say for the GP, if you think about the ideal relationship with your investors, what you're really looking for is a long-term relationship, right? Whereas you raise sequential funds, they're also raising, coming on board. And so this gives them a way to take an asset, especially in the venture space, that may be valuable, but tied up from a liquidity perspective for 5, 6, 7, 8 years, to be able to turn that into a more liquid asset in order to maybe commit to another new commitment for another fund with the same GP. I think it also allows GPs to have access maybe to other LPs that they wouldn't otherwise because they're constrained right now by the capital they put into funds. So I think it's a tactical tool that GPs will greatly value once they and their advisors really understand it.
And I'll just add, I agree with all that, but I would add that the blockchain makes it significantly easier than the ability to do it today in traditional financial circles. So NAV financing absolutely exists in TradFi today. It's just the cost the transparency, the planning, the coordination is, pretty significant in that you have a lot of different, looks at the loan. You have to underwrite the loan. You have to ensure that it complies with all the applicable legal covenants, the GP covenants. Obviously, transparency is key in all of this, and the ability to perfect ownership on blockchain, use Provenance blockchain's hold module where the actual position never leaves the investor's wallet, makes all that significantly easier. And I think we'll see the advancement of NAV loans on chain because of this.
Makes sense. And I appreciate you guys already covering that. I was going to ask about, if this is possible off chain and how blockchain kind of impacts this. But on that same note of, transparency and obviously efficiencies here, can you tell me a little bit about how NAV Lend is using Provenance blockchain and the digital asset registry technologies that you guys have, DART? How does that play into this whole life cycle?
Yeah, so we're starting with the foundation of the Provenance blockchain. We at GateCap Ventures have been longtime fans of Provenance and what's been built. I'll defer to Anthony to get really into sort of some of the technical pieces. But we're purposely built on Provenance because of the way it embraces both regulation and this functionality to turn digital tokens into a true collateral asset that the DART platform allows to mirror the UCC that everybody's so accustomed to. Anthony, I don't know if you want to talk more about DART, but
of course. So DART it's called Digital Asset Registry Technologies. It's a company that exists or started, I guess, to compete in the mortgage and HELOC space with a firm called Moro, which is owned by the ICE, which is the parent company to the New York Stock Exchange. And if you've ever filled out a mortgage or a home equity loan, taken out a mortgage or a HELOC, the paper-based process is extraordinarily heavy. The wet ink signatures that you need, the documents, you sit there and your wrist hurts after so many signatures. What Figure and its partners, Guarantee Rate, Movement Mortgage, Home Point, and several others have done is obviously they've digitized that process for HELOCs. And now you can have things like a video notary session, so you don't actually have to have a notary watch you sign things in person. You have all your other documents that are uploaded to what we call an encrypted object store, and a hash is then written to the NFT that is actually the creation of the loan. All of the ownership is perfected by DART, the DART function. And when DART perfects ownership in securities or assets in this case, they file the appropriate UCC code in order to get asset perfection of the asset, which enables then someone to buy a digital asset in the secondary market. We're using the same process here with NAV Lend in conjunction with an in-place hold in a wallet. So you can actually place an escrow and an in-place hold into a wallet. And this way you can be sure that whoever is offering the loan as collateral will ensure that that asset will always be there if the lender needs to take it over at some point in time. So it's just a cleaner, easier construct. It makes it much more efficient than the paper-based process that is used today.
Makes sense to me. So on the GP side, we have streamlined operations here. You're using multiple parts, both Provenance blockchain, DART, and of course NAV Lend is leveraging tech, as well as for the LPs, they're getting a liquidity optionality. You can take a loan out based on your NAV position and so forth. I think it's great. What would you say is a challenge that still needs to be fixed in the fund space in terms of tokenization adoption?
Just in general, funds in general?
Yeah.
Yeah, so we did a project with JP Morgan, Apollo, Wisdom Tree, Avalanche, and several others about 9 months ago, called Project Guardian, and it was presented at the Singapore FinTech Festival last November. It showed the future of private funds on chain, and JP Morgan had some really slick marketing around it, where they had a theoretical fund manager with 1,000 different SMA accounts, and it showed how she could rebalance those SMA accounts according to their model portfolio among many different private funds. And their marketing said we took 3,000 manual steps and brought it down to one function, all because the funds were all on blockchain and all ownership perfected through registries and creates, redeems, and trading for liquidity. Now, what was unsaid, it was a proof of concept, obviously. What was unsaid was there are not thousands of funds on chain today for the JP Morgan fund manager to pick the appropriate portfolio allocation. So it turns into a chicken and an egg, right? So we see the future. How do we get there, right? So for most funds, the present is going to be a little bit messier than they would like. So in order for blockchain value proposition to take hold, blockchain has to be cheaper, faster, and very most importantly, when you're talking about securities and financial assets, safer. For funds, that is not the case during the transition. So during the transition, there will be a time when it is the opposite of cheaper, faster, and safer. They'll have a digital twin or a digital receipt on chain. They'll have the offline transfer agent generally making the source of truth cap table, and then there'll be reconciliation issues and other fund related issues while they have two cap tables and they make the transition to blockchain. So when you go to a GP and you say, hey, let's tokenize your fund, they're going to have reservations to do that because, again, it's not cheaper, faster, and safer. So now this new technology, this new capability in NAV Loan that we have changes the conversation a little bit. Now there is a really good reason to tokenize your fund and to manage the transition process. So this is what we're going to be doing. We're going to be going out to all the fund complexes with the NAV Lend capability, with the platform that ProvLabs is building, and we think that is a reason to get that first 1,000 funds off of TradFi ledgers and onto DeFi ledgers.
Makes sense. I appreciate you sharing on Project Guardian, something we also touched on or did a whole panel on at Tokenize This 2024. Love what you guys are doing on that end. And I'm personally very excited for the wealth management space in general that gets to leverage that tech. But glad you ended it kind of, on my next question really, which is, Alfred, if you can tell me a little bit on pipeline, how much in, I guess, fund assets or AUM do you feel are ripe for, this solution as of today? And what do you plan to do in the next, call it 12 months?
Yeah, so we'll get started with a relatively small set of funds, right? And much in the same way Figure did, really work through the process in a slow way to allow people to see that it's safe. I think that's really what Figure has demonstrated, that the best way to get institutional grade assets on chain is to sort of eat your own cooking, and then when you develop the ability to show people that it works, we're going to take that same approach, right? So, it'll be, tens of millions of dollars of assets early, right? But if you think about the number of private funds just in the US, especially in, say, venture, you've got hundreds of billions, even trillions. I think the ideal candidates early will be especially venture funds who, if they use the venture capital exemption from being a fully registered investment advisor, they can't take on credit at the fund level, except in a really limited instance for essentially capital call loans. So a private equity fund that's a fully registered investment advisor, if they want some late liquidity in a fund, can actually take on debt at the asset level within the fund. Venture doesn't have that ability, which is why we think that's an exciting new thing for venture LPs. So we'll start there, and then we've had a lot of inbound interest since this was announced. So the pipeline's, I think, filling fast.
Very cool. Appreciate the breakdown. And I'm excited to see, I'm first of all glad to see that, you broke it down into venture kind of being the first, go at this tech. Curious to see, how much you guys bring on chain and help them in AUM over the next few months. But yeah, no, this is great, guys. Is there anything that you guys want to share before we hop off here?
I would just say that this is the one aspect of offering collateral on chain, and I know Figure Markets is looking at that holistically. So, in the future, you would be able to do a NAV loan on your gate cap private equity or venture fund and go use that 20% leverage that you just took and go buy Bitcoin, right? So being interoperable across a platform, I think, is a really interesting way to build an ecosystem. And I know Figure Markets is looking at that very, very closely. Certainly today on Figure Markets, you can take out a loan on your Bitcoin portfolio and go buy a private fund. So you can do the opposite of what we're talking about. It's just doing the private fund loan and then go buy Bitcoin is obviously a new capability because it's easier to underwrite Bitcoin than it is to underwrite a private fund.
Yeah, and I think that's a great point, Anthony. This interoperability, it's one of the things we liked about Provenance early on, and the vision that Mike had when he and his team launched it from Figure. The ability to take an asset that is sort of limited in use case today and use it, for a margin loan in the future is pretty exciting. And I think GPs will quickly start to appreciate how that opens their their potential investor base quite a bit if they offer that flexibility. So, Anthony and I have talked about this before. I think at some point it switches from a feature to a must-have for the general partners of the future to enable this capacity in their funds. And obviously we at NAV Lend are excited for that future.
Fantastic. Great. Well, I'm excited as well, guys. Thank you so much for coming on and sharing this. Obviously, anyone that is watching and thinks they could be using this solution, hit up Alfred and Anthony to learn more and see how you guys can work together. Appreciate it, both of you.
Thanks for the time, Jason.
Nico, my friend, I see you are back in Dubai. Welcome. How have you been?
Herwig, hello. Yes, it's been a long vacation. Good vacation. Loaded up the battery, so we're good to go.
All right. Well, we know as you've been watching the show that the industry has not slowed down, and this week has not changed. We've got a lot of cool news to talk about, especially for this segment here, talking about the heavy hitters. I think we got to go out the gate with MakerDAO, or should I say Sky, as they have sort of kind of rebranded or kind of pivoting into now launching a stable coin, USDS, as well as a Sky governance token associated with all that, as well as the ability to convert the Maker tokens and DAI tokens into this ecosystem. Now, those will still remain in circulation. There's no forced swap or anything like that going on, but clearly this is a new launch, a new big way to put attention to, I guess, another direction potentially. Nico, how did you interpret this news?
Yeah, I heard it yesterday evening, first time, so I haven't gotten time to really dig into this new evolution at Maker, or should we say Sky. The first thing that came up in my head is why are we changing names? Why are we changing structures? There's probably a good reason from the team side, but from my background as a TradFi guy, whenever companies or projects start changing names and starts changing structures, it's mostly not a good outcome at the end. So let's hope this is not the deal for Maker/Sky. Let's hope it is a positive evolution for the whole stablecoin/RWA community.
I think, MakerDAO, aka now Sky, I mean, they have built a reputation. They've obviously been a leader on the forefront with RWAs and DeFi. So they certainly get the credibility and reputation they've built. It is interesting to your take in terms of what this kind of means for the company, or what prompted, why not just launching this as another stable coin called Sky, as opposed to this kind of big, focus on trying to become Sky. It's interesting. I also have to dig into it more. But I think overall it's a testament to, again, RWAs are the future. Stable coins have been leading that charge, in the $150+ billion size, right? So, and it's just keep on growing. And we know the rest of RWAs are right behind that. We saw that, treasuries and liquidity products are essentially over 2 billion now. Right. So we're seeing a huge growth in these markets. And I think it's MakerDAO saying, all right, we know just how important it is to have a stable coin for this industry. So I'm definitely excited to look into it, because, they're one of the few companies I really respect doing DeFi and governance right, if you will, to a certain extent, and really innovating too on that front. So
you're absolutely right, Herwig, and that's the strange thing about this whole name change and stuff like that, because everybody's knows in Maker is a reputable organization. They're front runner and everything in regards to stablecoins. So yeah, it's a bit of a strange evolution for me. But let's hope for the best, and let's keep on growing as an industry.
I support it. Let's go Sky, if you will. All right. Well, moving on, we also saw some pretty cool tokenization pioneer Centrifuge is the headline here on Coinbase, unveils a lending market with Morpho and Coinbase. So the details here are obviously that they're using Base from Coinbase. This is very important as the L2 that sort of started to become a favorite for a lot of RWA companies, especially the ones around DeFi. And that makes a lot of sense given all of its success. But what's really cool here is, of course, they're actually working with also a couple other partners like Steakhouse Financial and others to really curate what they put out as 3 vaults on Morpho to go ahead and get yield. Centrifuge's Anemoy Fund, tokenized T-bills from Midas, and Hashnote's US Yield Coin. It's the first time there's a permission lending market, they say, using Ethereum's Coinbase using Ethereum's verifications there. So very, very interesting. I definitely want to go play around with this myself, actually. But I've always talked about on the show, Nico, that lending and collateralization is one of those fantastic ways the RWA market can grow, because we don't have to rely on this healthy secondary market trying to find buyers and sellers, et cetera, right? So the idea that you can get liquidity, or even that fact that you don't have to sell, might be a preference for some people to be able to get some cash out against their asset. And so these vaults and also getting yield, I think is going to be a big deal. What's your take on this, Nico?
Absolutely, Herwig. This is the easy score, of course, for our whole industry, is getting that liquidity through these platforms and these products. What's more interesting is that for me as a VC, is that Base is delivering one of the solutions to the ID/KYC issue we still have on chain. This is really not solved at the moment, so we need to look at better solutions so we can get permissioned on-chain DeFi. This is what's going to happen, in my opinion, on Ethereum through these L2 networks. And that's also what you see now with Centrifuge and the whole thing they're going to build. I'm still of the mindset that that Ethereum will be a big platform in this in these new RWA structures, and that the L2s will be the institutions, the banks coming online and being the app chains for their products and their public, let's say it like that, their clients. Maybe there's another. Maybe there could be other blockchains, but I think it's a good evolution, in my opinion.
I absolutely think so. And I know Centrifuge, they've been pioneering in this whole world for a long time. I know they did some stuff on Aave back in the day. Morpho really making a name for themselves. So keep an eye on them for sure, folks. Moving on, we also saw a big announcement from PayPal. So going away from Ethereum there into Solana with their PYUSD stablecoin, crossing $1 billion in market cap. Again, stablecoins have strong success. It's very exciting to see this growth. And now PayPal, it's a lot of people kind of said, hey, what do they have any business doing in Web3? And clearly they're showing that they did it the right way. I think choosing Solana and now crossing $1 billion. I'm sure it's going to go way, way beyond that. Any insights on this one, Nico? How do you feel about PYUSD?
I think it's a very interesting tiptoeing, you say it like that, from PayPal into the Solana ecosystem, because it's from a technical standpoint, it leans more to their proposition. It's instant settlement very quickly at lightning speeds. Maybe it's not only Ethereum that will be a player on the global play field of blockchains, and maybe Solana, because this looks for me like the beginning of it's comparable to when USDT was starting to play around on Ethereum years ago, when it started when they went from Bitcoin to Ethereum, and then the whole thing exploded in volume and in liquidity. I'm sensing that there's something going on with PayPal and Solana in the same sense, and that Solana could be indeed the retail chain, like they're hoping it would be, through a retail network platform like PayPal. So yeah, very, very good evolution, and keep Solana inside, guys. This is interesting, in my opinion.
Yeah, I think there's two components there, right? There is Solana, and there is also, I think, PayPal. You know, when it comes to stablecoin dominance, I think there's a couple of protocols and projects out there that are really vying for that kind of number 3 or number 4 spot between Tether and USDC. And I don't think anyone has that sort of claim yet easily. So I think in the next couple of years, we're going to see the market quickly change in terms of size and volume and activity. And Solana could be a big driver behind PayPal's success, I think. We got just a couple more. Oh, go ahead, Nico.
Yeah. If Solana will be indeed breaking through as a retail chain, then of course PayPal taking the lead as the stablecoin provider, it's a very good choice, of course, from a business development angle. Yes.
Big time. So I think we just got a few things to talk about more, because we do have Sid from Maple waiting for an interview for you all folks very soon. But actually, I want to pivot here real quick to a new layer 2 that I'm sure you saw, Nico. This is on Ethereum, of course, an L2 on Ethereum, but this is by none other than Sony, who's announced Sonium. Who's coming into the blockchain game in a big way. They brought in a lot of partners, as well as they're bringing Sony Music, Sony Pictures. I know a lot of other Sony divisions into this. And I have it on good authority that they're also going to be looking at RWAs. So what an interesting trend. You know, we're just talking about PayPal and their stable coin, but now you got Sony and their own L2. Nico, I'd love to get your take. I don't know if you got into this news yet at all.
Yeah, I saw that. It's already, I think, 2 days ago or so that they announced it. Look, these empires of content out there, they have so much IP on their balance sheets, which is not valued at the moment, or not properly valued by the market. This is the way for them to, get extra value out of their company, putting all this stuff on chain and letting the market decide what's happening. It's coming. It's first the banks, then the insurance companies, then the broader economy. The bigger players will come. Disney, Sony, all these big entities will come. Everybody who has a large IP portfolio, has large intangibles on their balance sheet, they will be coming to these blockchains in one way or the other. On L2s, their own blockchain, whatever it will be. Yes, it will be coming.
Yeah, I'm excited to see now that this is live. We saw the success of Base and how much that's doing for Coinbase. I'm really curious to see how Sony is going to be able to sort of penetrate the Web3 community on that end. How do they get, what's the reception, if you will? But on the other end, how much are they really going to put their money where their mouth is, if you will, right? Are they actually going to do cool projects on their chain, really start to bring in a lot of their actual processes, maybe internally on their chain? Who knows? How are they actually going to use it? Or is this kind of like the NFT days where we saw a lot of, and I think maybe Sony included, a couple of gimmick NFT sales out there that, were kind of flash in the pans, right? So obviously, I think this is going to have a much bigger impact. And I think this is actually a very big deal for, again, encouraging enterprise adoption, as well as seeing where Sony could really, again, favor or win over the DeFi and the crypto native community. So we'll have to keep our eyes on this one.
I think this is different than the NFT season because these guys are announcing an L2 project before the real heights of the bull market are in town. There's no bullishness going on in the crypto economy at the moment. Everybody's quite bearish, with these prices. It's kind of strange for me to experience that. I've experienced 3 cycles already, and this is kind of strange for me to see all this pessimism and bearishness. So with Sony coming now to the market, it's for me another signal. Then we're just hopping on this train and riding it. I think it's maybe that. But as they say in the UK, the proof in the pudding is in the eating, or something like that.
The proof is in the pudding. Yeah, no, that's why we're gonna absolutely keep you all updated here on the Security Token Show, and we've got so much more news to cover. In fact, there's a lot of milestones getting hit. We saw that Open Eden recently hit 100 million TVL, especially with their Ripple help. That makes a lot of sense. But an even bigger milestone, over 350 million TVL over by Maple, who we've got an amazing interview coming up with. I think it's closer to 365. I'm sure he'll confirm that for us. So with that, Nico, thanks again for joining us. Welcome back. And let's head on over to a Security Token Show interview with Sid and Jason.
Hey, how's it going, everyone? We have another Security Token Show interview today. We have Sid Powell from Maple. Sid, how are you today?
I'm good, Jason. Thanks for having me.
Thanks for coming on. Always appreciate it. Sid, you guys have some exciting news. You guys have recently crossed 350 TVL. Give us the numbers, give us the breakdown on that, and what Maple has historically done, and how excited you guys are for this new milestone.
Yeah, definitely. So we crossed 350 mil the other week. We actually hit a high of 365, but it's currently sitting at back at 350 again, with the recent price movement in Bitcoin. But I think the real drivers of that were Syrup, which was a product we launched about 2 months ago. So this was a more DeFi-friendly version of the same institutional yield product that we've offered through the regular Maple protocol or a platform. So Syrup's currently sitting at about 75 mil TVL. And then we also saw a lot of growth, like a big driver of our growth over Q2 was the high yield secured pool. So this was doing loans against Solana. So instead of just the vanilla BTC and ETH backed lending product, we broadened that to include Solana, and that was able to hit a higher yield because we had the staking yield from the collateral, of course. So that one crossed 100 mil and drove significant growth on the platform. But
wow,
so a bit of exciting momentum across July and August.
Really, really exciting. And actually, on the market movements, Nico and Herwig just talked about Solana expansion. So real quick, can you tell us a little bit why Solana came into your crosshairs and how that decision got made?
Yes, I mean, Solana we found to be a really interesting gap in the lending market, where we found institutional borrowers who were holding it, who wanted to post it as collateral, and then given the impressive staking yield that had been on Solana for validators, we were able to generate higher yields on the collateral, and that meant that high yield pool for a while was paying north of 18% for people who were lending USDC in there. And that really brought a lot of demand in from hedge funds, from high net worths, who lent stablecoins in that pool. We of course have a cash management product on Solana, but it is definitely one of the most interesting ecosystems that we continue to monitor. I think huge success for them recently with the PYUSD, I should say, launch on there from PayPal.
Got it. Okay, cool. So that makes sense to me. And you guys had someone recently announced Syrup. I know we covered it on the show when it first launched. But for those that maybe are a little bit newer to the ecosystem here, can you quickly explain, the traditional Maple ecosystem versus the Syrup one, and the main differences there for any investors that might want to partake?
Yeah, so it's still all part of the core Maple ecosystem, but the regular Maple product is only available to accredited investors who wish to onboard as lenders, and so that one can be offered and is available in the US. But we wanted to have a product that was going to be more DeFi integrated, and so unfortunately we had to wall Syrup off from the US. But it does give us more potential to integrate DAOs, other protocols that want to build on top of it and offer yield products to their users. But it's still, the impressive thing is that it still has the same underlying high quality institutional borrowers who are all borrowing over collateralized from the pool. So we launched that we did a soft launch in June, and then it's really been going about 2 months now, and it's hit over 75 mil TVL. So we've been super happy with that growth, and we've actually seen we can't announce it yet, but we will in the next couple of weeks. We've seen some very large protocols start to deposit their treasuries into that. So that's been a huge win for us in terms of partnerships.
That's exciting because we have seen that grow, across the ecosystem too. We've seen protocols and DAOs, put their treasuries into Biddle and other ones like SuperSig. Curious to see, what it looks like on the Syrup, side of things here. And, I think definitely. I might have there. Did you have another update there?
I was just going to say, I think one of the things that's kind of propelled that growth has been the yield has been relatively stable, and it's been hovering in the mid-teens. I think at the moment, spot is around 13-14%. And this compares pretty favorably with the other opportunities out there in DeFi. So I think most other DeFi opportunities have been around sort of mid to high single digits. And so that's driven certainly some market share gains on that product.
Makes sense. And 75 million is not a small number, by the way, for you guys, especially people that are traditionally from TradFi and are used to huge numbers. And in this world, 75 mil is a pretty decent number, especially out of your total TVL here. What are you expecting to see in September in terms of performance here?
So some of the big things that we've got on the horizon. So September for us will have the third season of the Drips program rewards on Syrup. So I think that'll continue to bring in more lenders onto the Syrup Fi platform. And then we've also been gearing up for a token migration. So we of course have the MPL token, which governs the overall Maple protocol. And that will be transitioning and migrating to the Syrup token in November. And so that'll be 100-to-1 split, but everyone who currently holds the MPL token will be able to migrate that across, which will mean burning it and receiving Syrup. And then you'll be able to stake the Syrup token. And so we'll have some inflationary rewards for it. So you'll be able to earn new Syrup tokens if you do stake and secure the network. And so that's really important for us to re-engage the community. I think over the last couple of years, we've sort of seen community, the community wasn't really able to use the platform as much. And so we wanted to bring them back in and really encourage more community participation and governance. The other big thing we'll be doing in September is the Tether pool. So Syrup is currently offering USDC pool, but Tether obviously has a really large market presence in Asia. And so this is a global platform. And so we'll be launching that in the second week of September. So we're really excited to see how that will do. And we're also looking forward to bringing some new DeFi partnerships in for the launch of that pool and just seeing how it does. It's certainly a nut we weren't able to crack before.
Wow. Expansions, new jurisdictions, new pools. I'm excited about this. I'm excited to cover it on the show as well. So Sid, if you're open to it, we'd love to have you back on once those announcements come out and really dive into the details there for our audience here. In the meantime, how would they find out about these announcements as they come out? What's the best way to get in contact with Maple?
Best way to follow us is at Maple Finance on Twitter, or we have at SyrupFi as well for the Syrup product. We actually just did a webinar yesterday on X Spaces, so I think that's something we're going to try and do more regularly going forward. And then, of course, I think everyone is in the lending space is paying attention to the rate cuts and the potential election results. So that has the potential to really shake up yield markets in crypto. I think if we do see a rally before the end of the year, you'll certainly see the rates that people are getting on lending stablecoins push up pretty, potentially quite dramatically, maybe 3 or 4%. So that's certainly something to pay attention to.
Definitely will be. Sid, thank you so much for coming on. We appreciate your time and your insights here. Again, I'm really excited for the September updates, so hopefully we have you on again.
Awesome. Thanks for having me, Jason.
Wow, what an update from Sid and Maple there. That's amazing stuff. Huge record there on TV. I'll love to see all those updates. Definitely a lot coming in September to keep up on, so definitely keep up with them. And thank you, Jason, for crushing that interview there too. But now, folks, we've got way more news in the industry to try to get through, including some new issuance to start off with here, including over from French firm Natixis Brief Bank. Sorry if I butchered that, but this was Tedeka Bank, and it was a registered covered bond. And what that means is that it was a 100 million euro bond that's actually collateralized by a pool of mortgage loans. And the collateralization is now becoming a growing trend, as we're seeing in the tokenization space, I think, lately. And also interesting that you see this one being issued on the SWIAT blockchain, if you haven't heard of that. So sticking to debt instruments, also the Asian Infrastructure Investment Bank, they issued its first digitally native note on Euroclear's platform, which is a big deal, bringing in $300 million worth of sustainable development bond program. And it's actually a couple of firsts in this here. The first time Euroclear hosts a US dollar denominated digital issuance and their first Asia-based issuer. So pretty novel, pretty cool to see. And other participants included BMO Capital Markets, Citi, rating agencies, Moody's, S&P, and Fitch all gave this note a AAA rating. What else is going on in Europe is My House AG and Token Forge are launching a real estate tokenization platform, kicking it off with assets from German-based DeGag and working with firms like Nyala and Tangany. Real estate is, of course, continuing to be a hot topic, specifically in Europe, as we heard last week from the Realize partnership with StegX. And now here comes also a fun one from Mexico here, which is tokenized tequila, baby. It's a tokenized tequila distillery, specifically on Block Square. The issuer Rancho Altos is offering exposure to both their operations and the real estate behind it. So accepting, Block Square's staked BST token for the offering from retail investors with a goal of 100K BST. More specifically, the project features a distillery along with luxury villas, a wellness center, a farm-to-table restaurant, and ecotourism that facilitates on an 82-hectare estate. And then to close out with new issuance here, we have Boson Protocol working with Super Chief Gallery to tokenize $5.1 million worth of art, including some pretty impressive pieces from Louise Nevelson, Buffy Johnson, and Imbra Lasaw. We do have to note that these are NFTs, however, so of course, always do your own research, especially as we saw OpenSea last week receiving a Wells notice from the SEC. Moving on to some other updates, we also have Redwood Trust's RWT Horizons arm issuing their 21st securitization leveraging Liquid Fi's technology to manage these securitizations on chain, right? And this one is an amount for $439 million, which actually brings their total to around $8.5 billion across those 21 securitizations. Of course, we're tracking them on STM if you'd like to take a look. We also saw an update from DCJPY, which started testing their tokenized deposit solution around 5 weeks ago, and it's now moving officially into the production stage. So they partner with GMO Azora NetBank, which was the first to tokenize their deposits using this DCPJY platform. And honestly, I think this is great news. It's, enabling instant payments 24/7 and for those on-chain instant settlement benefits here. So it doesn't actually stop there. Their server hosts IIJ, tokenizes renewable energy certificates and sells them to clients with secondary distribution in a future timeline. And staying in the APAC region, the Hong Kong Monetary Authority opened up its tokenization sandbox, Project Ensemble, this past Wednesday, actually. So HSBC is already testing 3 POCs, proof of concepts, right? And Hashkey Group has shown interest in joining these as well. These POCs consist of digital bonds via HSBC Orion, interbank tokenized deposits with Hang Seng Bank, and electronic bills of Lading EBL, which will prove useful in the global trade and servicing space. And diving in further, folks, into partnerships and expansions. First, we have Superstate submitting their proposal for Sky, as we talked about, MakerDAO, Spark's tokenization Grand Prix. Now, if you remember from all that, this is a big deal. They're trying to raise $1 billion essentially for their treasury to collateralize their stable coins, their reserves, if you will. Superstate believes that their tokenized treasury fund USTB will help Sky stabilize their DAI USDS stablecoin. And previous allocations into USTB also did include Arbitrum's DAO, Mountain Protocol's USDM reserves, as we reported last week, and there's active considerations from Athena Labs as well. This week, we also saw Polymesh be integrated into Alpha Point's white label tokenization platform, dubbing them the blockchain of choice, and they're the RWA protocol on the platform. So as Alpha Point customers look for tokenization, they'll all obviously be using Polymesh. So that should lead to a lot of hopefully new issuances there. And Assetera over in Europe, a few more articles here. We found they actually found a marketplace partner with Metapolitan. So essentially that means the tokenized assets from Assetera will hopefully be able to list on this regulated EU marketplace for trading security tokens with Metapolitan. That's how you put this full life cycle together, folks, and really attain the most value, of course, from tokenization. So I'm excited to see more and more secondary trading going live as we've seen just a lot of focus, of course, on a lot of primary issuances lately. And tokenized stocks have also been growing in popularity, especially now with Denari now tapping into the fast-growing base community. Their D shares, representing some of the biggest and most popular U.S. public stocks, will be supported on base. So I'm excited to see if this leads to any DeFi partnerships to follow using D shares on base. And the next bit of news is about a token launchpad. Token launchpads being a model to help spurn token issuances on a specific chain. So logically, in this case, Fraction Z will encourage activity as a launchpad on Z chains, one of the first dApps actually on Z chains, and it's focused on RWAs, offering the full stack tokenization platform, allowing the chain to now compete in RWA tokenization. And finally, last but not least, another chain for RWAs called Allo, which has over $2 billion in assets already on chain, announced this week a partnership with Jagged, a firm in Indonesia, tokenizing real estate there. And now it's, of course, using Allo's technology with this partnership. So I'm just, it's great to see all of these geographies around the world start to put their real estate on chain as always envisioned. Even a couple weeks ago, we announced Nigerian government announcing plans to support that over there. You're just seeing it everywhere. You gotta love what's happening in tokenization right now. And I'm already pumped for next week. But first, I have to pick a company of the week. And before we do that, don't go anywhere because we got one last interview with Tyler Vinson from REtokens, which recently tokenized a church and a whole lot more. Let's dive in.
Welcome back to another Security Token Show interview. Today we are joined once again by Tyler Vinson from REtokens. Tyler, how are you today?
I'm doing great, Jason. How are you guys doing?
Doing well. We're working on some reports as per usual. We started noticing more and more assets on your platform. So want to touch base and see what's going on. Tell me a little bit about the variety of assets. I know there's a church. I know there's Island Sky Ventures. Tell me a little bit what's on REtokens today.
Yeah, absolutely. There was a media article, maybe 6 weeks ago or so, that kind of announced the projects that are on there now. And you're right, we've got a 32-unit hospitality style apartment development in Texas, kind of the Gulf of Mexico there. Beautiful project. We've got an acquisition fund on there to acquire multi-unit properties in the Pacific Northwest. And then, of course, the big one that the media reported a lot on was Old Stone Church. And that is in Fort Collins, Colorado. And then we're at the tail end of the REtokens equity piece that we've had open. So that project's up on there too.
Interesting. Let's touch on one of these first, and then I do want to go back to the church. But I also noticed that you're a part of too, right? You have the security token for REtokens, that offering, and then you have the other offering. I think it's a fund that you're also managing. Can you tell us a little bit about kind of the difference between the two and how that works?
Yeah, the REtokens one is actually equity in REtokens. We tokenize the company itself, and as a capital raise, we sold some of those security tokens, and we're right at the tail end of closing that up. It closes first week of September here. So if you're watching this and you're interested in that one, time's running out. But the other one is an acquisition fund. My background is in real estate acquisition, real estate investment, multifamily storage unit, and then of course some other commercial as well. But that fund in particular is designed to take advantage of some of the opportunities that we're starting to see in the real estate market. We've seen some softening in prices. We've seen pressure on real estate syndicators due to loans coming due and the difficulty in refinancing in a high interest rate environment. So I put together a $10 million fund to do some acquisition in the Pacific Northwest of multifamily unit and storage unit, which is really a lot of my expertise in the real estate world.
Gotcha. So two different offerings, two different purposes. So again, check both of them out, both on REtokens. Let's go back to the church, Tyler. It sounds like this is a first. It's definitely a first that I've heard of, a tokenized church. Tell us about that offering and maybe what's been reported as well, and maybe your take on that.
Yeah, absolutely. So the rumor was that it was the first church to be tokenized in the world. And then ultimately, a lot of media picked that up, including Forbes, who really broke the story. And it appears it is indeed the first church in the world to be tokenized. So there's been a lot of media attention around that. In fact, I just got done responding to somebody else wanting to do an interview on that. But Forbes broke the story. It was pretty interesting. We had worked with them for a couple of weeks, and I think that they had some interesting twists in there, maybe some sensationalism regarding my real estate business, which I'm not too involved with anymore other than doing actual acquisitions. But we're grateful that they did the story and broke it. It ended up last Wednesday, I think it was on maybe 116 different media outlets around the world. I think 18 had done exclusive stories on it. And I appreciate you guys being one of the first to recognize it and get it out there as well. But it's been very cool because there's a lot of, normally when you tokenize, right, we're always talking about return on investment, and these are investment properties or investment digital assets and things like that. But I think tokenizing the church really highlights the uniqueness of what can be tokenized in the real estate world, and that there can be a lot more benefits than just return on investment by itself. Just take the Sky token, for example, that's on REtokens. It's the hospitality development in the Gulf of Mexico there in Texas. They are able to add features. So when people invest in their token, they can have a certain amount of nights or a certain amount of perks at these hospitality developments. And I think that's going to be a very popular thing. And when it comes to the church, we've had conversations where there's other churches now looking to tokenize, because it was very much about community impact and very much about these ministries being able to kind of come together to get a church. Normally, you'll see small or mid-sized churches that cannot afford their own church building. But tokenization is something that allows them to kind of come together and do that, as well as allow the community to truly have impact. So I'm very interested to see what type of unique properties we'll tokenize in the future here. There's been everything from museums to historic properties and things like that now that people are kind of opening their mind to and thinking, wow, we can have the community actually own a piece of this, and it can really be kind of a legacy investment as well. So it's been fun to watch and be a part of.
Yeah, I like it. It's a really interesting use case. I did want to ask too, would you say that this is possible without the church being tokenized? For example, if the purpose is to acquire, land or whatnot, to be able to have more, locations and so forth, is this possible without blockchain, or how is blockchain really enabling the community there to be more empowered?
Yeah, well, I mean, it's also possible to walk or jog the Tour de France, but I think it's going to be a longer, harder road, right? So, yeah, I mean, it's a security. So we're operating under current, security compliance. That one is a SEC exemption called the Reg D, Regulation D 506C, which is something that you commonly see out there. I think the real difference, and this is where tokenization of assets comes in strong, especially in real estate, which is typically very difficult to buy, sell, and trade individual shares of. So technically, yeah, you could do the same exact thing and sell, membership units, if you will, but it's much more difficult to share that with the public. It's much more difficult to move those shares around and manage them, so on and so forth. So by tokenizing it and making the ownership digital, he can really get it out there to the world. And it's a Reg D 506C, so we'll say all accredited investors in the world. But that allows for a lot more participation than could otherwise be done. And through a platform like REtokens, each one of those investors is able to log in. They have their own account. They can see their tokens in there. Traditionally, in something like this, you're kind of going to just depend on an Excel spreadsheet on the syndicator or sponsor's computer, right? Or maybe you have a subscription agreement and that's all you have, to where now we have it in token form, which is much easier to see, manage, and then ultimately trade around. And I think the long game here with Old Stone Church is to not only get the community and churchgoers that are accredited investors involved, but ultimately be able to open it up to non-accredited investors. So as a 506C, after 12 months, these securities will be available for trading on a secondary market, to where retail investors, they still got to go through KYC, but retail investors, non-accredited investors, regular churchgoers can get involved and actually own a piece of this. I mean, if you think about it, if there's a family that goes to the church or participates in these ministries, a lot of times that's very, very generational. And now imagine not only being able to contribute to what the church is doing and actually get the benefits of ownership there, but being able to pass that through in legacy form. There's also been creative thoughts that we've now started to come up with after doing this. Like, you can invest in the token, you could own it and hold it, but then you could also donate it back. And there's tax benefits to buying real estate, right? But this is still an investment, so it wasn't the typical nonprofit. However, you can donate that back, and now it is a typical nonprofit tax write-off. No tax advice given here. It's just some of the conversations that we're seeing out there.
Really, really interesting. Again, it's the power of blockchain that really allows you to get creative with it, democratize as well that access. And I want to touch on your earlier point about also making it accessible to the non-accredited investors. Does REtokens have, to your point on the 12-month lockup, it's tradable after? Do you guys have any plans later on to enable that?
Yeah, we're pretty excited to announce right here with you that March 2025, we will launch a digital ATS, digital alternative trading system, where tokens like the Stone token here of the church and other tokens will be able to be sold under Rule 144. So under Rule 144, once a security has been seasoned for 12 months or 12 months after it's sold, it can actually be sold to non-accredited retail investors. And so we intend to do that with all of the real estate projects that we are tokenizing. So we're very, very excited about it. It's going to really lower the entry barrier for folks to be able to get into high quality real estate investments. So we'll be launching this ATS in March 2025.
That's super exciting. Appreciate you letting our audience know first here on the Security Token Show, Tyler. And I'm excited, obviously, as you guys know, we do track a lot of this on stm.co, and to have another ATS join the secondary markets here, and for security tokens specifically, that excites us to see, what else happens. Of course, you guys are working on real estate, around the world and in unique use cases such as the church here. I'm curious to see what else you'll launch in the primary phase from here to March. And then what that activity will look like on the secondaries, especially as you grow your audience, as each of your issuers also grow and contribute their investor base too. And of course, cross-pollination, that's another thing too, that you might have invested into one property because it called your attention. But now that you have an ATS available, you might even be interested in maybe divesting a little bit from one property and investing into another. You never know, what becomes possible. So all good stuff, Tyler. Anything else that our audience should know on that?
Yeah, no, I think your point's well made. I mean, not only is there now access to folks that didn't necessarily have access to that, and vice versa, syndicators and LPs now have liquidity paths, LPs being limited partners, but you can diversify. I mean, real estate is a wealth building animal. So maybe you want to buy some tokens into a property that has great tax benefits. Maybe you want to buy into a property that has great cash flow, or one that has fantastic future equity. And you can actually optimize your own portfolio that way. So I think that's really exciting. Yeah, and another thing would be with this digital ATS we're going to be launching early next year, it's our intention to allow other real estate token issuance platforms to participate in our ATS. So we'll have, we've already got under contract $100 million worth of real estate. Approximately 30's on platform right now. By the end of September, there'll be approximately another 70, and we're in talks that would put us well over $1.5 billion. And then having other issuance platforms be able to participate in this is fantastic for the consumer, because we can start to standardize things. I know you guys recently did a show regarding ratings on security tokens. And once we're able to standardize things a little bit more, we can provide that type of rating, for example, for real estate security tokens, and really be a spot where people who want to invest in real estate, or a form of can go there and get the right information and the right tools that are dedicated to that. Because we also do real estate notes. So people that are looking for fixed income products can actually invest into tokenized real estate notes. And that's on the horizon as well. Wow. There's a lot in the pipeline here that you guys are working on, Tyler. I had no clue. So even better for us and our audience, again, to anticipate all that by end of year, as well as going into kicking off 2025 on a strong note. This is all exciting stuff, man. Thanks for coming on and sharing all of this. Any last minute messages before we hop off here? No, just a pleasure to be on, and appreciate what you guys do, putting information and data together, and look forward to talking to you soon.
Awesome. Likewise. Thank you, Tyler. Appreciate it.
All right. See you, Jason.
Yeah, wow, what another final great third interview there with Tyler and Jason. Amazing. Thank you, of course, also to Sid and Anthony and Alfred for coming on the show. All of you this week, REtokens, Maple, NAV Lend, ProvLabs, and everybody else we talked about this week, just doing amazing things in the space, which is what makes this part of the show difficult. I got to pick one of them to be my company of the week, to put a spotlight on what they did. And in this case, normally I have Kyle to also help get a second pick out there, get the spotlight on two companies. And specifically, I actually am going to tap into Kyle's Company of the Week nomination this week and kind of use it myself to award it to two companies because they both get it for the article, that news announcement that really caught my eye. I'm talking about Centrifuge's announcement for their lending marketplace with Morpho. So Kyle, Centrifuge is going to be your Company of the Week this week. And it's absolutely warranted. You know, they've tokenized over $500 million in RWAs. They're a leader in DeFi, creating incredible pools. If you haven't gone to their website, check them out. They have incredible transparency, a ton of data behind these asset pools that they've set up. Congratulations, Centrifuge. But personally, I wanted to give my Company of the Week out to Morpho because I've been seeing what they're doing with their vaults technology, and they're extremely popular for a lot of other DeFi use cases, but they are also supporting RWA. Centrifuge not here being the first situation for their Morpho vaults technology. And we've talked a lot about the potential of collateralization already on the show earlier today. So I actually think this is a really big deal between Centrifuge and Morpho, specifically helping kind of power this marketplace together with Centrifuge. So both of those companies of the week here for what they've done together. Congratulations, Centrifuge and Morpho. Keep it up. I'm very excited to see where the marketplace goes and the adoption around your initial three products there. We'll be keeping an eye on it on the show here and at STM. And that's it, folks. That's the show. We're going to continue to bring on more and more interviews. Of course, the news doesn't stop. We're going to really try to keep it all as briefly and concisely and put it all together for you every week. But we have amazing newsletters on Mondays that you should check out. Go subscribe at stm.co, also where you can get the latest trading data and news and information around the space. Let us be your one-stop shop. And of course, reach out on Twitter or on LinkedIn, wherever, X, I should say. You know, we're here. We want your feedback. We want your questions. We want your suggestions. We're always here to engage and support the RWA industry. And with that, meanwhile, have a great weekend and happy tokenizing.